Hey everyone, welcome to Alpha Insights. I'm Dakota.
And I'm Jeff. Glad you could join us today. And hey, if you have questions while you're listening, drop them at stockalpha.ai.
Today we're unpacking a company a lot of folks automatically lump in with the big cannabis growers. But it's actually playing a very different game.
Right. The quick framing, most people see a small market cap and a few million in revenue and think, oh, another producer. But this business is more like a marketplace and service provider for the industry.
Exactly. Think less greenhouse, more shelf and logistics. They host a bunch of licensed producers, handle packaging, excise stamping, filings, direct delivery in British Columbia, and they run a medical marketplace for veterans. So, let's break that down. The company runs three main lines: a curated marketplace that connects medical patients with craft producers, contract manufacturing and logistics, packaging, vape filling, pre-rolls, that whole back office, and a B2B direct delivery channel into BC dispensaries.
Right, and to add to that, they also operate a veterans-focused storefront that plugs into the Veterans Affairs Reimbursement Program. That program reimbursed producers over $200 million in the past. So that's sticky, insurance-backed demand, not commodity flower selling off by the ton.
Yeah, that's a good point.
Short reactions, interesting.
Short reactions, right.
So the misconception matters because everyone compares this company to producers like Sundial, Organogram, Kronos, and Tilray. But those are cultivation-led businesses. Heavy assets, harvest cycles, and a price-squeezed wholesale market.
The industry reality is there are close to 900 licensed producers chasing a domestic market that barely grew last year. Wholesale flower prices have been under pressure for years. Producers are fighting on price. This company, by contrast, makes money when transactions happen across the producers it hosts. It wants volume, not a particular strain to win.
That difference changes how you value the business. Marketplaces and service providers are asset light. Incremental transactions often flow straight to gross profit because they don't carry cultivation costs.
Let's talk numbers, because the data supports that reframe. The company grew gross sales 37% in 2025, and the fourth quarter was up about 115% year over year. Gross margin expanded by roughly 260 basis points to 22.7%. Adjusted EBITDA turned positive in the fourth quarter, about $100,000 or $200,000 excluding one-off financing costs.
Those are meaningful inflection signs. Contrast that with the big producers that grew low single digits, or in one case about 12.5%, with an acquisition-driven bump. This company's growth in that context looks organic and recurring.
They also closed an oversubscribed private placement for $2.1 million last October, with minimal debt and no toxic warrant overhang. Small but tidy capital structure for a scaling service business.
Again, not a giant balance sheet play. It's a tech-enabled funnel and logistics provider that can scale without planting more greenhouses.
Now, why does this matter for U.S. regulatory momentum? The health policy changes that are being discussed mean medical channels could be reclassified in a way that makes federal tax treatment and institutional capital more accessible.
Exactly. Producers will get a headline re-rate because tax relief and fresh capital help their P&Ls. But marketplace businesses can benefit in a different, perhaps faster way. They can license technology, partner, or extend their veteran-focused medical funnel into U.S. state programs without a heavy U.S. footprint.
So the company isn't dependent on which licensed producer wins a pricing battle. Its exposure is to the overall size of the transaction pipe. If more patients and retailers transact, everyone wins, including the platform.
And the recent corporate moves thread right into that playbook. Over the past week, they've checked a few boxes. Direct-to-consumer plumbing put in place, a high-profile former cabinet minister joining in a full-time leadership role, the quarterly results we just mentioned, and an articulated U.S. market strategy emphasizing asset-light entry paths built on veteran infrastructure.
It's rare to see that many supportive items line up so cleanly. But, of course there are risks.
Right. First, sector beta. If the whole cannabis tape sells off, a niche marketplace doesn't magically decouple. Second, regulatory timing. The federal changes are moving, but the calendar is uncertain. Third, liquidity. This is a micro-cap thin tape, so position sizing matters. Fourth, execution risk on U.S. entry. They're outlining pathways, not closing deals. And finally, marketplace concentration. If they lose key suppliers or their curation loses credibility, the moat could erode.
Investors should also remember the typical microcap dynamics: volatility, tighter spreads, and the danger of chasing momentum.
We should be clear for listeners, this isn't a recommendation to buy, sell, or hold anything. Analysts note the data suggests a different comparison group for this company, and the narrative is compelling, but it's informational only.
Totally. No personalized investment advice here. The takeaway is simply a different lens. View it as a picks and shovels platform rather than a grower of commodity flower.
So, quick summary of the big points?
Yeah. 1. This company is a curated marketplace and services provider, not a traditional producer. 2. The financials show accelerating organic growth and improving margins consistent with an asset-light model. 3. Regulatory catalysts plus recent corporate actions create a clear, non-consensus pathway into U.S. medical channels, but execution and microcap risks remain.
Perfect. Final two-liners from me. Keep an eye on transaction volume and veteran program traction as the cleanest short-term signals. And, watch for any concrete U.S. partnerships. Those would materially change the story.
Yeah, agreed. And remember, if you want deeper data or to ask us about something you heard today, head over to stockalpha.ai, where you can ask us anything, and we'll answer live.
Got questions? We'd love to hear from you. Go to stockalpha.ai and use the Q&A feature. While you're there, check out more market content. Thanks for listening.